Hope you're doing well. Can everyone see my screen? Hear me okay? There we go. Now it's looking like it's transmitting. Morning, good morning. Hopefully everyone can hear me, see my screen. Thanks for tuning in. Oh, let's see, before we dig in, grab the economic calendar real quick. And let's make this snappy. So we had some economic data the last 2 days, not a ton. Today we have, a little bit of PMI and some factory and core capital equipment revision, final. Usually means they're just updating to, lock in a past reported thing. Tomorrow we have jobless claims, and Friday we have NFP, non-farm payroll, which can sometimes kick us into movement out of a range. So we'll see what we get on those two. Not going to review earnings. There's, not a bunch. There's not many crazy earnings left. I think we did have AMD that kind of didn't go so well. We'll see that, but a quick review. Yesterday, again, apologies for not having prep posted on YouTube. We just did it live in the Discord because I had some power outage issues and I had to relocate and all kinds of stuff. But what we talked about in that brief prep in Discord was we have our main zone that we were losing a little pre-market. I said watch this 40.87 for support. We bounced off that pre-market and fought back to our zone. Then we had a quick dip to retest that level and this squeeze bottom, where we had a number of awesome calls hitting their buy zones, be it their bird bottom or beast. Called out the 41.50s. That went about 50-60 cents up to I think $4, something like that. So held that level, fought back to our zones, held that, fought higher, held each level, fought through the daily 100, held that to get up to our next key level and zone, top and squeeze top. Then right back down, bouncing at key levels, rejecting that 100, and a sell into close. As we normally get with a sell into close, as long as we hold that key level again, you can get a nicer ramp right back up overnight. So now dealing with a gap up after a gap down. It's basically the same thesis, the same range today. You can see that the squeezes did open a little to the downside, so that it now, the squeeze cloud now encompasses that 40.71. Should we get going to the downside? But, we are holding range. We've had a good rally up. Since we've been over that 40.87, it's provided support multiple times. So we really shouldn't be too concerned with downside or breaking this range as long as that 40.87 holds up. And we're trying to fight through a very key zone. This 41.36 was support even in February and March sell-offs. It bounced at this zone. We ultimately did go below it, so now we're back at it. And it's not surprising to see us run into it and can't get through, because there are a lot of old orders sitting out there. We run into it and can't get through repeatedly until we chew through all of those sellers and start making it up to the next key level. 41.65. So for ES, we've arrived in this range. We have key levels to the downside, to the upside. We have our squeeze tops and bottoms. We know what to do. We play those ranges till they break. Yesterday when we hit squeeze bottom and key levels, we went long. When we hit squeeze top and key levels, it went short. Worked out the previous day as well. So that's what we keep doing. Looks like these 30-minute squeezes are firing since we have pushed over the daily 100. So let's see in the cash session if they do a quick continuation up to zone and then a fade back off of squeeze tops to retest things. We could just get that dip at open to retest our main support zone here and to, somewhat fill the gap before heading higher. But on a nice uptrend, don't want to fight the trend. So let's see. Ultimately looking to get up to this zone again, squeeze tops, and then try to break through to that 41.65. But if we reject and come back, looking for us to come back to this 41.08, 41.01, 40.87 to retest and find buyers at support. In Q. In Q, very similar story. Key levels that we're dealing with and keep retesting. This 890, which the daily 100 is pretty much at. This 790, which the daily 8 has now caught up to. And you can see back on Friday, we held that 790 a couple of times. So if we start to reject and see some market rolling over, expecting it to get to that 790 to hold again and to officially test the daily 8 since it has kind of caught up to the rally. We'll go back and check on ES. I did that. I can't remember if the daily 8 was still below considerably, but already arriving at this 13,000 pre-market. We have not spent much time above that, as you can see. We get above it a little, but then back down. Same yesterday. Let's see if we start to push into these squeeze clouds and come back, if 13,000 can hold. If not, I expect to come back and test that 890 at least, which would fill the gap, before going back to retest squeeze tops. We have that daily Keltner up in those squeeze tops as well. You can use those daily Keltners as a good line in the sand when it's time to short back out of a cloud. Let it get above, let it start to show signs of weakness, and when it starts breaking below, you can short it back. Worked 2 days in a row. So, let's see if 13,000 will hold, or that 960. If not, going to test this 890 in the daily 100, and if that can't hold, down to the 790 in the daily 8. But if we can go to the upside, I want to take out, want to stay above 13,000, take out these highs from the last 2 days around this daily Keltner, 13,100 basically. With the overall goal of trying to fire and get out to our zones above. But, and our third Keltner is now right in the middle of those zones. Or of that zone, sorry. So, if we start to break out of these consolidation and squeeze clouds to the downside, losing that 790, first stop would be that 690, and then the daily 21 and daily 15, have caught up to this 460. Ready. Already got up over 1900 yesterday, and it's looking like it's almost there right now, just a couple of points off. That is the Ready's very key level, 1900. So, well, let's see if it can get back above and sustain and try to push. You might notice that small caps are kind of in an upward channel, whereas the ES and NQ were kind of just in a sideways channel. And these squeezes are starting to gravitate up to show that. So, well, let's see on the Ready if it can at least hold this trend line from overnight. It did not go back all the way down to where it based in the day, so kind of some relative strength in the Ready. They're just meaning they're rotating into it. So, see if we can get over 1900 and start to push. Next Keltner would be up at 1942 to get to third Keltner. If we reject that 1900, likely coming back to test 1880, kind of where we bounced end of the day and held overnight. And if that gives out back to the daily 100 and daily 8. YM. Update the numbers. It's still, there we go. Still showing Ready, but YM over that 32,500 psych level that can provide support as we try to push through these clouds if we see a little pullback. Look for that 32,500 to hold to send us up to the daily 100. If it can't, we're likely going to come back and test this daily Keltner at about 32,420 and this daily 8, which is now in the bottom of the squeeze. So let's see if we can hold that uptrend that we've got from overnight. If we come back to test and start to lose, looking for it to hold the squeeze bottoms. Daily 8 and daily Keltner to push up to the daily 100 and break out to this week's high at that 32,900. So we had a nice push into it on Monday. Now we've been fading back. Let's see if we are going to break that trend and flip it to the upside. And you'll probably want to mark a little trend line from the last 2 days' highs as we are approaching that pre-market. So you can see a nice little wedge. Watch this wedge on YM. If we can break out, get above this daily 100, we can see the market get a good push and maybe start to break out of its range to the upside. Apple. So Apple holding up nicely after this gap up on earnings. Worth marking that low from earnings, from right after open. That's the profit taking, and then they held it up. And you can see we bounced at it yesterday, pre-market, and held. And you can see this little wick from pre-market today. So that's the floor that we need to hold on Apple in this, bull flag after a good earnings report. You could draw a trend line as well from the highs here, so that it's kind of a flat bottomed wedge to keep an eye out and to play that range till it breaks. If we can get through that trend line and squeeze tops, looking to go from about 162 up to 165, getting through that earnings high. And should this 159 give out, daily 8 is going to be right at the bottom of this 4-hour squeeze that is now formed back at 158. AMD. just going to keep on trekking through, try and get through all these names as quick as I can. Don't start slowing down. There we go. So AMD, obviously a negative reaction to earnings, but overall tagged the daily 8 and is now pushing off of it. We have the daily 100 as well. You know, if it was really bad earnings, they easily could have dropped it down to all of these moving averages, but they just hit the first couple, and we're now even still opening above Monday's low and above Friday's high. So we could easily see that they still rotate into chips and we come right back up off this earnings. But it's always worth, you know, checking to see just how bad did they do. Almost looks like a beat on some things, but yeah. AMD might be looking for it to push off of this daily 100. If it starts to lose it, probably going back to the daily 8, bottom of squeezes, and if those give out back to these moving averages below, if it truly is a bad reaction, sometimes it's just to pick it up cheaper. Just like on Apple, doing a good job of holding up the gap up on earnings. So, on Amazon, you know, basically it is stuck between second and third Keltner, and second Keltner is now right at the top of that gap fill zone. So pretty easy, you play this range until it breaks. If we start to give up that second Keltner and the top of this gap fill, going first to these moving averages, we could still go sideways until the 21 catches up to this gap so that it could rip down, do a reversion to the mean before going higher. It can easily break out to the upside and push past third Keltner and live up there for a while. But, you know, usually when we get to third Keltner, we see some consolidation, some profit taking, some reversion to the mean kind of signs. So, you know, pretty clear on Amazon. You can keep playing this range till it breaks, and when it breaks one way or the other, it's going to make a nice move. Oh, CBA got almost up to that third Keltner on Monday. Now it's pulled back below the second. You know, kind of this descending wedge. If it can't hold 163, the base of yesterday, to try and stay and get out of this wedge. Probably going to come down to test the daily 8, which will be around 161. But if long as you can hold 163, 164, and try to push back to that second Keltner and back to Monday's little range. Cat. So, down on earnings, TSLA pop down further to the daily 21. Let's see if it settles around this daily 15, around 182. You know, which is kind of the highs of this consolidation back here. We can hold 182, we can try to start making our way back through these moving averages, with the goal to get back up to 193. But it was not getting a ton of love before. It just had a ramp into earnings and then, you know, a negative reaction. So if it starts to give out that 182, might head down to 178 pretty quick. Google. For Google, now we have a nice squeeze bottom right back at a recent high after that earnings push, and some of these lows, right? So definitely looking for that to hold along with these moving averages to push Google out of this squeeze top and this first Keltner up, in a goal to get up to the daily 100, this daily squeeze top, and the second Keltner. We basically pulled up to the first Keltner, having a little break. So, looking for that 113. 113, 113 and a half to hold. That daily 21 likely going to be stepping right up there. So Google might want to take a dip, hit the daily 21 fully, the squeeze bottom, before finally pushing out of this first Keltner and squeeze top with a goal of getting to the next moving average Keltner and squeeze top above. Should 113 give out, we might roll back to 110, but the whole market would probably be rolling and firing squeezes to the downside. I'm just going to skip to Microsoft. So, Microsoft, good earnings, nice push off of moving averages, got above this daily 100 shelf, had a couple of days pulling back and settling on that daily 100 shelf. Now squeeze bottoms caught up to that, so as long as that can hold, we can push back up to this high, this daily Keltner, and attempt to make it to that third Keltner. And as you see from this trend line, we're already starting to get through there pre-market. So let's see if this 30-minute squeeze is resistance. If we have a slight pullback to fill the gap, test daily 100 again, and maybe even this trend line that we're breaking out of. But as long as we can hold daily 100, or even that trend line, can try to push back to 280, get through 282 in a bid to get up to this squeeze top at around 282, get through 285 to 288. And Netflix, not a ton of interest. But its daily 8 has caught up. So if it takes a dip to 220, it'll be testing that daily 8. Could give it a nice bounce to get it back to 230. And an attempt to try to get through, trend line from highs and fire the squeeze to the upside to get from second Keltner to third. Video likely had a slight negative reaction to AMD earnings. Let's see. I watched these lows from pre-market the last few days. It seems to be a nice floor for it, around 180 and a half-ish. If we have a little pullback, should that give out, likely coming down to where this daily 8 is going to be, around 180. In fact, the daily 8, daily Keltner making a nice little zone of support, should we see a dip. If those give out, coming back to 4-hour squeeze bottom, 176. If that gives out, down to these moving averages, as long as 176 can hold, 180. Those pre-market lows, right? We can make another attempt to get through this 87 to 89 range, with a goal of getting to that daily 100 and that psychological 200 above. QQQ. And the specters and spiders and Teslas and VIX. So QQQ, talked about in prep yesterday and the day before, 311, very key level. We tagged that pre-market and during the cash session, got over that daily 100, fought up to our zone, squeezed tops, and then back to the daily 100, holding that, setting a higher low. So we're pretty poised to try to break through, but we do have all these squeezed tops. We have highs from the week to break through in a bid to get to that 320, 323. If we reject this zone again, likely coming back to test 314, 311. That daily 100 as well. Should we start to lose this 311, we could easily slip through this squeeze cloud and tag this daily 8 and daily Keltner, which are probably going to be stepping up near 309 and a half, 310. SPX. We had that gap down yesterday. We filled that gap, then came back down after rejecting highs. But we held the gap up zone, right? Now we're going to be having a little gap up of about 24 points. So, you know, going to be back near this 4118 and this daily 100. See if we can push off that, get through 30, 40, and 50 at the top of this squeeze. If we start to reject and see see a dip in the market to try to fill the gap, I'd be looking first to fill that gap, tag this gap zone for a bounce. Could easily slip through it. Key level below that gap zone if we see weakness in the market today, but everything's in a nice uptrend, so if we can break out, hit the top of this squeeze, 4150, and break out, next zone above, and daily Keltner all up there, just like our other targets. SPY. Alright. SPY fought back above this zone. Let's see if it can hold at open. We don't always have to fill the gap. As we saw in SPX, we have a gap fill zone back here. So let's see if we can hold this zone on SPY. It's nice that we're right at it at open. Should that give out, likely coming back to fill the gap. As long as we can hold, can start to push up into these squeezes. Back to that 414 key level, but we got to take out some highs, that daily 100. You know, so if someone gives out, back to fill the gap, back to squeeze bottoms. And, ooh, we'll take a quick look. Daily 8 and Keltner could be stepping up right outside the bottom of the squeeze. If everything does roll and we're weak, we could slip enough to tag that and then get back into squeeze and keep going. Tesla. While we're waiting on that to load, one thing I'll point out, if you look at ES on a 4-hour chart, in all of this hitting key zone and pulling back, we've been holding the 4-hour 21. Held it yesterday, held it overnight, pushing off of it. So we have our support, we have our buyers trying to push us up through this zone. Trend is holding. quite well. Tesla. Decent hold yesterday off that daily Keltner. Push right up to the next daily Keltner. Took a break. Now we're knocking on that door. So Tesla could break out of this squeeze early and push. We could run into these highs, come back to test, 900 one last time, setting, consecutively higher lows. If 900 gives out, could go fast down to this squeeze bottom if the whole market's rolling. But if we continue with strength and just push, looking for it to break this 930 in a bid to get up to 964 on the way to that 1,000. VIX. VIX in a nice downtrend after hitting the daily 21 on these silly pop-ups that we had. Rejected the 21, rejected the 15, below the 15, below our 23.3 pre-market. So all signs looking good there. Let's see if we can stay under 23.3, stay under this daily 8, to push back down to this 22.5, breaking this trend line from the lows of the last couple of days. And breaking that 22.5 could set us to firing all those squeezes to the upside and send VIX back down to the bottom of this daily squeeze. But if we're going to roll over, we might see VIX hold 23, hold this trend line, or maybe even yesterday's low, right? 22.8, 22.6. Could see VIX hit that, turn around, start tearing back through the daily 8, 23.3, back to the 15, and this wedge top, right? So if we stay in squeezes today, might see that bounce, us go down near squeeze bottoms, would send VIX up near wedge top. But if we can break that early, that trend line, and that 23, could get quick to that 22.5. We consolidate at squeeze tops, consolidate at 22.5. If that gives out, we break out through squeeze tops, that kind of thing. So hopefully this was helpful, folks. I know it ran close to open. Thanks for tuning in. See you guys in chat, and good luck today.